Boy, oh boy, has it been a roller coaster over the last few days with those massive losses at the beginning of the week. I'd like to get your perspective on what has happened over the last few days, but also reflect on the fact that we do have a bit of a bounce back today. What is behind that?
Yeah, so without going into too much detail, I'll try and give everybody who's listening, who may be, catching up on everything that's been going on, a high level summary of what many people are calling the reason for this. And let me just say, this is actually not an easy thing to diagnose in terms of what caused this big sell-off. There's many things. I've heard people say that, a closing of the spread on who's going to win the election in the United States has caused some concerns, right? Not necessarily because of Harris winning or Trump winning, but because of the uncertainty of who could win. I've heard that be a concern. I've heard Middle Eastern conflicts be a concern for global markets as well. Could that cause a rise in oil prices and inflation resurge, or just spending be dramatic? There's so many different things, but then there's also what I would say is probably the most strong culprit of the mix, which is on Friday, you had a weak jobs data number come out from the U.S. We discussed that and how shocking that was, really weak jobs data point. But then on the following Monday, we saw a very large capitulation move in the Japanese yen. Now, for listeners who are not familiar with the carry trade is a very popular phenomenon for hedge funds and large-scale investors. Now, the carry trade in a nutshell is basically because the Bank of Japan offers very low borrowing rates, hedge funds will borrow money from the Bank of Japan, and they will then deploy that where they think they can get better yield. And better yield could be in the form of bonds in the US, bonds in Europe, bonds in other places, or perhaps stocks in other places, stocks, real estate, business investment. The point is, the Bank of Japan is kind of like the world's piggy bank for the last few years, and people have been borrowing against the yen, selling the yen, buying other currencies to buy other, assets. Most people can kind of understand that concept, but then the flood that happened on Monday was, the yen has been strengthening in recent weeks, but there was a big capitulation move where we saw on Friday that jobs data point towards the idea that, okay, now the U.S. is likely to cut interest rates dramatically. And if that happens, then the carry trade with and we also, by the way, we saw the Bank of Japan raise their interest rates. So now you see that the spread of that selling or borrowing yen and buying other places for higher yield, that has narrowed and caused a lot of people, a lot of hedge funds and money managers to reverse course and back it up and go the other way, sell other currencies in order to buy back and pay their debts that are denominated in yen. So we've seen a little bit of the carry trade unwind concern come into the picture for markets. And here's the thing, that caused a big capitulation move. And you're asking, what about the buyback that happened in the last 2 days? Is this sustainable? That's the question that everybody's got in their mind. But I think that there is a possibility that that big flush in the yen to the upside and then coming back down today is a signal that perhaps we've worked off some of the global margin call that may have occurred on Monday and Friday. And maybe that is just a short-term thing. I mean, the yen has been rallying for the last few weeks, but we saw sort of that capitulation move on Monday, and maybe that was kind of like the grand finale. Now, I want to clarify, though, that I'm not saying that is absolutely, we're in the clear and things are all good. There are still concerns that the continued expectations for rate cuts in the United States and other places could prolong and continue the unwind of the carry trade, especially if recession fears stay strong. So overall, that was what caused the big drama in my view, and in many other participants of the market. That is the kind of the main culprit that we see. The question is whether or not it's going to continue. And right now, it seems like with the Nikkei up 6% on the day, that perhaps some optimism that was just a short-term kind of flush of fear could be behind us. But again, it's a bit early to call, and markets are likely to stay very, very volatile. We've been seeing swings on the stock market of like 2% every day across the U.S. stock market and other places, which is very, very much higher than we're used used to in recent years. If you enjoyed this video from the Market Insights Market Pulse podcast, you can listen to the full episode by clicking the link down below in the description. You can find us on your favorite podcasting apps, and again, we post several times a week, so if you're looking for market updates throughout the week, this is the place to be. Whether you're in the car on the way to work or something like that, make sure to tune in to get the latest. Thank you very much for watching. We'll see you on the next one.